Thank God it's Friday, but we'll do business before we get into the weekend. Good morning, everyone. Welcome to 55 minutes of current and relevant business conversations. I'm Ini John Mekwa, and this is Business Morning. We start as usual from what's going on in the global oil space. Today, we see that prices edged up before a long holiday weekend in the United States, starting from today. The market is wary of optimism held over efforts to secure peace in the Middle East and the United States, as well as Iran. So we see the numbers down this morning, but not very deep from what we see. 0.03% down for Brent at $71.74. And WTI is also down 0.28%, $68.49 a barrel. During the prior session, we did see that both benchmarks hit their lowest levels since about a month before the Israeli war and Iran started. And then away from what's going on in the global oil space this morning, we see that Dangote has again slashed the price of petrol. This is how many times? I believe this is like the third time. But of course, responding to what's going on in the global space, they announced that further reduction in the ex-depot price of premium motor spirit as petrol, and the latest reduction brings the cumulative decrease in the refinery's PMS ex-depot price to 200 naira per litre since May 30 of this year. At the same time, the refinery has also reduced the ex-depot price of automotive gas oil, that's AGO diesel, by 300 naira for a litre, while the price of Jet A1 aviation fuel has also been dropped by 520 naira for a litre. This was captured in a statement that was released yesterday. The private crude refining giant says that the successive reductions reflect its commitment to passing lower production costs to consumers while maintaining the long-term sustainability of domestic refining operations. However, the refinery explains that petroleum products pricing cannot mirror daily movement in international crude oil market because crude oil is purchased weeks and sometimes months before it is processed. So now let's see how the market fared yesterday. We're still where we were. We're still in the red zone for Nigeria. Yesterday, the market was down 0.63%, lost more than 1 trillion naira. 224,321.97 is the all share that we closed at. Then the market cap, 143.946 trillion naira. 877, almost 1 trillion naira lost yesterday. Well, the market is losing, investors are getting the money out. That's what happens. Volume, value, and deals were in the green because, of course, it's being compared to the previous day. So can we see the other part of it? Top gainers, Learn Africa, Austin Lars, and DAS Communication, they gained, while top losers, Guinea Insurance, CMFC, and FT Insurance, they were the top losers for yesterday. And we have top trades, Sterling, Zenith, and Universal Insurance. They did that. So everybody's feeling this profit taking that's going on in the Nigerian market. We spoke to Mr. Rwani yesterday, Mr. Bismarck Rwani, and he says, well, it's not necessarily negative. Hopefully, it's just a market cycle, and all of this money being taken out should come back, to the markets when the IPO is out. But you don't want to miss Business Incorporated. We'll do a bit of accumulation of what the market has lost or gained so far in the first half. So you want to follow us at 1:30. I'll be back by then. So leaving the market for now, the Africa Finance Corporation has raised $500 million through a 5-year Eurobond, securing the tightest spread and lowest borrowing cost in its history. The issuance, which carries a 5.375% coupon, drew strong demand from global institutional investors, achieving approximately twice the oversubscription. The move underscores confidence in the continent's multilateral development financial institutions' strength and Africa's infrastructure investment landscape. In his response, the president of the AFC, Samaila Zubairu, says that the successful fundraising reflects the institution's strategy, which has boosted investors' confidence in as well as its role in Africa's economic transformation. And still talking about institutions, multilateral institutions on the continent, yesterday I brought you just a bit of the media meeting that we had with the president of Afreximbank in the Federal Capital Territory, Abuja. Well, now I'll bring you more of what we had, the conversation that we had with him, and some issues that he raised and plans that Afreximbank has in the pipeline for the continent. Plot 1573 off Rafshodeinde Street, Central Business District, Abuja, houses the major regional office of the African Export-Import Bank, Afreximbank, and the Afreximbank African Trade Center in Nigeria, while the global headquarters for the bank remains in Cairo, Egypt. It's an edifice which serves as offices, meeting and conference venues, and even accommodation for participants of the bank's events, and it's open for commercial use.
Beginning to realize that
Dr. George Elombi, the fourth president and chairman of the board of directors of Afreximbank, meets with members of the fourth realm of estate about a year since he's been appointed president. And his first focus is the controversy surrounding ratings of the bank and perception of global ratings agencies of Africa.
That they didn't think that through trade we could do anything in the continent. And in any case, we were too small. Then you come back to 2026 where we are. And that whole S&P report is based about the relevance of Afreximbank. From irrelevance in 2014 to relevance in 2026. So, even though we had disengaged from their rating, we kept contact. We spoke, we discussed business, and we discussed trade. I think it took time, and that's why we prefer to have a discussion like this with you. It took time for them to realize, or for a new leadership there to realize that we trade, we could become relevant, and that we have actually become relevant. That's why you see that what looks like a triple notch, or maybe 3.5 notches up from where Fitch thought it was taking us to. It's because we changed the messaging.
This concern has intensified the continent's efforts to create its rating agency, which Dr. Elombi says has started and will record a tangible level of progress in no distant time. With the continent now more determined to drive domestic capital for development, Afreximbank has embraced diversified platforms to raise capital, paths which the president says are less expensive and creates more liquidity. And he says these strategies have led to capital adequacy ratio of 23% as of March 31, 2026.
The equipment goes to Africa. So we began to diversify. We also thought that Africa's capital is sitting abroad. And so Afreximbank should try and capture some of that. So we created a central bank deposit program, or what we call briefly a deposit program, SENDEP. And we began to attract deposits from African central banks, from African corporates. And so when you look at the liquidity profile of Afreximbank as a whole, you see that the dependence on Western sources of liquidity has reduced. 38% now from Africa, 38% from Asia, about 12% from the Middle East. So Western resources has now come down to around 12%. Then the rating agencies say that since you've not been raising money from the European bond market.
And while the bank boosts its capital, integrating trade and payment system cannot be overemphasized.
slow, but it's gone extremely fast. See, to that free trade area you see, to trade properly, there are too many things that have to happen in the background, and the public usually isn't aware because the AFCFTA Secretariat needs more people to be talking to the press. You have to harmonize the standards. And harmonizing the standards means you take thousands and thousands of products, then you harmonize the standards. And everybody agrees that that's the standard. Then you start trading. And that process of harmonization takes a long time because you're bringing standards officials from many countries to sit in a room like this.
Dr. Elombi says meetings like this with journalists would increase, and this, among other things, he says, would help journalists tell the right story about Africa.
The vision of your presidency, second one around the update on the...
And now to other issues here in Nigeria. 3.35 trillion naira, that's the total amount that Nigeria Customs Service says it has generated in revenue between January and May this year. The revenue performance was disclosed by the Assistant Controller of Customs, Titus Omajali, during the presentation of the operational achievements of the NCS within the 5-month period. According to him, the sharp increase was accompanied by a significant rise in export container traffic, with throughputs more than doubling from 2,847 containers in March to 6,144 containers in April, signaling increased participation by exporters and stronger trade activities. He explains that the feat was driven by stronger trade facilitation, improved customs processing, and intensified border enforcement operations across the country. Still staying with customs, the Lagos Free Trade Zone Command has recorded its highest monthly revenue since it was created, collecting more than 87.1 billion naira in the month of June. The strong performance pushed the command's revenue for the first half of 2026 to 408.9 billion naira, an increase of nearly 29% compared with the same period last year. Speaking at the command's half-year media briefing, the Customs Area Controller for the Lagos Free Trade Zone Command, Controller Hawa Abubakar, says that stronger compliance, closer engagement with businesses, and increased use of automated customs systems helped drive the growth.
Like you know, just a couple of months, there's a green channel introduced to the command. The green channel is mainly to facilitate trade, to make sure that we have a seamless transaction, to make the free zones more comfortable in doing their daily activities. So which contributed to facilitation of trade within the ports, movements of cargo within the ports to the free zone, which make it easier for every investors to have their raw materials in good times and produce their products and move it to customs zone, and we generate our revenue. That really helped us a lot. And for the ports, with amazing equipment that we have in Lekki Deep Sea Port, I'm telling you that Lekki Deep Sea Port is not only #1 in Nigeria, it's going to be #1 deep sea port to the world, the way we are going.
Talking about boasting about your work right there, like the customs, well, I guess everybody have their own time, and this is their time. Away from that, the Minister of Power, Mr. Joseph Tegbe, says that Nigeria must begin to deploy mini-grids to industrial clusters to power economic growth. The minister gave the keynote address at the high-level launch of Africa Mini-Grids program that was in Abuja, asking critical implementation partners like the Rural Electrification Agency and the United Nations Development Program to use access to power as an enabler of economic growth. Our correspondent, Dele Omoyeni, was there.
The Africa Minigrids program is a technical assistance initiative put together to accelerate clean energy across sub-Saharan Africa. The Minister of Power, Joseph Tegbe, who is the keynote speaker at this high-level launch of the program's activities, says the program must be used as a tool for economic growth.
Access to reliable electricity remains one of the strongest drivers of economic transformation. We've said it earlier, it's not about infrastructure, it's about economic transformation. This not only powers businesses, it powers education, it powers healthcare, it powers agriculture, commerce, digital innovation. You keep talking about AI. I know some of our people will getting to understand what AI is, but we'll get there. And we talk about industrial development. There are some things, it's a push and pull. There are some things that forces development, it forces industrialization. When you put the enablers there, it forces it to happen. And when the industrialization starts to happen, it forces you to also electrify the environment.
Implementation partners reveal that the program has been the most successful on the continent, with 28 sites across the country.
Nigeria is the first country in Africa that had completed the deployment of that mini-grid. We are discussing with the United Nations United Development Program as well as the Global Environment Facility for the scaling of this intervention because of the critical importance of the project that we had already completed.
We need to put our energies creating jobs, opportunities for young people, businesses that can thrive, hospitals that can be powered. I think that's where we want to put our energies and our focus.
States like Lagos, Plateau, Abia, Cross River, and Niger already have sites. However, stakeholders promise to scale the program to increase the number of benefiting states. Dele Omoyeni, Channels Television News.
We're staying on economic development now, and of course, power is at the heart of it. But what Afri is saying that there's a strategy that should be used to optimize and accelerate economic development in Nigeria, from resource optimization, industrial leakages, regional integration. And well, we've heard a lot of great ideas about how Nigeria can accelerate its development over the years. And they also have this transforming ideas into action, where they say they could be sugar by Elsa, water by Elsa, and Afri markets. This says that could help stakeholders engagement on developing sugar cane. Nigeria, of course, we know has a lot of resources, mineral resources, agriculture, human resources. Well, here they are suggesting that perhaps sugar by Elsa, putting a lot of research, funding, and attention to developing the sugar cane value chain, says a sugar cane based economic system. That could be one way. Of course, we have others. We have cocoa, we have agriculture. I'm always, in awe of what we could do with ginger, as insignificant as it sounds, and how rich we are in ginger in southern Kaduna, for instance. At least that's the one I know. Just everywhere there. So if that's produced as a value chain around there, and I know first thing on your mind is insecurity, which everyone agrees is a major distraction to our development in Nigeria. Well, they also have a national strategy, a Nigeria economic blueprint. It says employment creation, industrial growth, sustainable development. While most of these ideas are not new, I doubt there's any idea that could come out new at this time. We've had so many of them. I guess the core is at the implementation. Do we say political will? Do we say infrastructure? But, well, this is at the core of it. It's not just about having the ideas, which we have heard and seen in blueprints and policy papers and all of that. Let's take a short break now. Hopefully when we come back, Mr. Bamidele's audio will be good. Please stay with us. You're welcome back, and it's still Business Morning here, and we're discussing how's engineering Nigeria's economy according to the ideas of Africa Economy Engineering Initiative. We have the founder, Mr. Bamidele Adedayo Moore, joining us virtually. Good morning once again. Can you hear me now?
Yes, I can hear you clearly. Good morning.
And I'm glad to hear you. So I was just saying, looking at some of your ideas at Afri, and I was saying, fine, of course they are great ideas, but we've had a lot of great ideas, and yet we are still where we are. So perhaps instead of just having ideas, we should find out what's going on or what we are missing in spite of the great ideas and policies.
Okay, thank you very much. I and my team have been working on what we call IDEA for over 5 years now, and it has been thorough research where we've addressed the challenges that hinders ideas from coming to life and the scenario of the country, which can be related to other African countries. Now, for we, the economy of Nigeria, the situation of Nigeria is not yet a crisis. It's an evolutionary change. Nigeria is going through a phase which is evolving. And when we talk about evolution, it's natural, it's nature. And when evolution takes its course, it puts in place resources that are required to address the challenges that come with evolution. And the assignment, the task that is being given to man to win Nigeria is to identify these provisions that Mother Nature have put in place, organize them, and deploy them to the area of challenges. And this is what we've been doing. There is a fact that most people know that Nigeria is endowed with both human and environmental resources. And we have institutions that have been established across the country, across various African regions, that has been there for ages, but yet has not still given us the result we want in Nigeria. They say across the country we have our resources available, but yet we can't say of what it has resulted to when it comes to the well-being of the citizen. So what we do is identifying the abundant resources. Most of the resources in Nigeria are not well governed. Most of the systems in Nigeria are not integrated. Now, you can't get a result from a system when all the components within it are not connected, when there is no flow. Nigeria, when you look at it in the common sense, Nigeria is more like a system, is like an organization where you have different departments, and all these departments must work together as an organization for the organization to get the result, the common goal of all the departments, the sole goal of the vision of the organization itself. So, talking about the state of the country, it is evolution. And the assignment is identifying, which is what we do. We identify abundant resources across the nation, across the region, and build value on them to take the economic growth and development of their place of host, of the region of host. And we have built a system that does this holistically, multi-sector economic system that cuts across different sectors and are integrated. Now, currently in Nigeria, it's natural. Every state in Nigeria is characterized by at least one resource, excluding human resources, by one resource that is in quality and quantity. And if attention is being put into these resources, these are resources that each state, each region can depend on. Now, it is said that the wealth of a nation is determined by the state of its resources, and also the rate at which an economic growth is determined by the quality and quantity of its academic institutions. And when you look at Nigeria, all these things are available. Now, most of us, we are expecting so much from the government, from the politicians. Yeah, they are the policymakers. They are those that are expected to make things happen. And too bad for us in Nigeria. We are in a part of the world where we don't really believe in ideas. We don't believe in small things becoming real, small things becoming big. So you tend to see people want to be involved in finished things, or they want to go outside to copy and paste in the country, or they want to depend on a system that is working in the Western world and bring it down here to
Mr.
come and work in our
Mr. Moore. So I mean,
Yes.
sorry to interrupt you, but what I was asking actually is, you have this idea. You talked about every part of the country does have something, and I'm sure you know about a program by the Ministry of Industry, Federal Ministry of Industry, where they said one community and one commodity. That's an ongoing program. I mean, how successful it is or fruitful it is another question. So I'm saying that these ideas that you're postulating are already in existence or have been shared. How do we make it work? That's actually what we're looking for in the country. We have a lot of ideas and suggestions and all of that, as well as policies. How do we make it different? How do we get a different result from what we've been having? Because the ideas are out there. They're being talked about. They've been written down and shared and everywhere.
Okay, thank you very much. Yeah. You see, for us to get a result, we are creating ideas that are isolated. You are trying to, let's say you are trying to build the primary industry while you are ignoring the development of the, you are trying to build the primary producers while you are ignoring the secondary and the tertiary producers. For you to get a result, everything has to be developed holistically. If you want to focus on the rural development, now you have to also look into, while you are developing the rurals, there are roles the urban centers has to play in the development of the rural. So while you are working on the rural, there's a need for you to also work on the urban centers and integrate them. Now, this is what I'm trying to say. Okay, in our system, we understand that there is abundant resources across. Now, if we want to build value on these abundant resources for the place where we have them in abundance, okay, we look at the gap in the market, then we build a value. Let's say probably in let's say in Bielsa, they have a large quantity of let's say sugarcane or plantain, or let's say palm fruit. Then we build economy. There are a lot of things that can come from these abundant resources. Then we build an economic value on them, which majority of the rural communities are those that that venture into agriculture as a primary occupation. Now, while we are trying to say, okay, let the rural start going into agriculture, focus on the production of, let's say, plantain, do much on that. Now, what are those that will be taking it from them? What is the chain of, if, let's say, they start producing it in abundance, how do they take it? How do they export it? How do people get to know that this is happening here? Now, I'll give an example. Let's say the ministry. We have Ministry of Agriculture, we have Ministry of Industry, we have Ministry of Education. All these ministries are supposed to work interconnectedly, not each ministry working dependently. Let the Ministry of Information work on information. If Ministry of Education is working on education, something the Ministry of Education, let the Ministry of Information project it. If there is something happening in the Ministry of Agri, let the Ministry of Education work on enlightening people on what is being done. Now, ideas will come, but if you are there will be ideas that focuses on some areas where you want to engineer, you want to fix. Now, if you focus on this, there's other sectors that are down. Now, while you are working on this, the sector that is down is affecting that sector that you are working on, because for the prosperity of that you are working on, you need these other sector to make it work. So the issue we are having is we are working on one sector without being connected to another sector. Whereas you in this sector, you cannot do it alone. There are things that you are doing that is dependent on another sector. And if that sector does not do its own part in developing what it's required from the sector for your own sector to perform, then no matter what you put into that sector, it's going to fail on the long run.
All
That's
right.
why I was relating to system.
Okay.
It's like a pillar. Do you understand what I'm saying? It's like a pillar, you put pillars together.
Yeah.
So when one falls on one, it falls on another.
Yeah, it will affect everyone. All right. So Nigeria's system should stop working in silos from the government agencies to ministries. I believe that's what you're saying, Mr. Moore,
Yes.
for acceleration of development, economic development. Thank you so much, founder of AFRI. AFRI is Africa Economy Engineering Initiative, Mr. Bamidele Moore. Thank you for your time.
Thank you very much.
Of course, we're still discussing the economy. It's a business show. And eyes turn to what the International Monetary Fund has said recently. They said that Nigeria failed to record public spending equivalent of about 2% of its gross domestic product in recent official budgets. And that has created a gap between its reported fiscal deficit and actual financing needs. This was shared by the IMF resident representative, Mr. Christian Ebeke. Shared this this week in Lagos. And he says that the discrepancy means that Nigeria's fiscal deficit appears smaller than the government's actual borrowing needs because some capital expenditure was excluded from budget documents and implementation reports. Now, whether this was done intentionally or not, that's another conversation. But the IMF is now, I think even before now, called attention to Nigeria's fiscal framework and the gap between the reality, that's the actual, and what's being reported. Let's try to understand the implications of this with Dr. Ayodele Ebo. He's the principal consultant, joins us now. Dr. Ebo, good morning and welcome to the program.
Good morning, Ni. It's great to be here.
Good to have you. So this concern that the IMF is raising, I know that AFDB also has talked about fiscal discipline and all of that, and now the IMF in Nigeria has made this observation. What are your thoughts?
I think the first thing is it's major dent on our perception, because when you look at that perception around the economy, because transparency is key. So it's not even, my focus won't be about the borrowings that looks high, because if we are estimating that they are spending that can be estimated 2% of our GDP, maybe will be around between 8 and 9 trillion. So that is significant, that has not been captured in the budget. That in itself, when you look at the impact in terms of monetary policy, when you inject that kind of money, funds into the system, how it can fuel inflation, how it can distort MPC or monetary policy plans. So I think it's really a major concern that would also like to understand the major reason behind this exclusion from the budget, because like I said, 8 to 9 trillion is not a small amount of money, 2% of our GDP as it's been estimated. And when you look at it further into looking at this year's budget, you would also see about 34 trillion. By the time you also estimate that, that's close to about 40 trillion deficit, which will call for concern. How will the funding be done? So I think that these are some of the questions that people begin to ask. You know, if you recall, the 2025 budget has continued to be rolled over, which is not something we thought. We've gone beyond that. When you look at past years, that we see the budget performance, we see budget is passed on time. And I think that there's a need to come back to that trend, that we're able to fully track the budget performance. We're also able to pass the budget, and it's a 1-year implementation plan and not an extension like we've been seeing.
Dr. Ebo. Hello, Dr. Ebo, can you hear me?
Yeah, I can hear you.
I said, perhaps, do you think this omission is just an error or, there are other reasons that might be responsible for this?
Yes, that's why like I said, that we also not to preempt or to make a statement on behalf of the government but it's a lot of money that needs explanation. 8 trillion or 9 trillion is a major amount that I may say it's not an omission, but let's see what is the reason behind this. But what the focus, I think we also need to look at, and government should focus on, is that we may lose credibility in terms of those that track the budget, to see how it will impact on the economy. Those that also track the budget to see how, even for the monetary policy, how they track the budget on how they control money supply. So it has more far-reaching implications, that there's a need to understand the reason behind excluding some capital projects from the budget, because also what's the process of approval for spending this money. So I think it's really a concerning issue or subject matter.
Yeah, and it also brings to question the fiscal framework that the country uses. I mean, you've talked about the fact that we've been rolling over our budgets for how many years now. The president had promised that will end this year, but of course, just saying it doesn't bring it to pass in reality. So do you think that perhaps Nigeria's fiscal framework needs some tweaking?
Yes, so I think that it's a no-brainer, because we've already also seen you work, that we can plan. You see, by September, October, we see that budget is presented and is approved even before Christmas, December, and we work with the new year, so you can project. But this extension that we're seeing, maybe there needs to be, it's not about the policy. I think it's about the will, power to ensure that this is what I want, even as the president, this is what I want, and to ensure that it works, because we've seen it work not too far before we started this extension rollover, that even when people are asking you about the budget, most people don't even pay attention to it again. It's not as if for some of us, the analysts, because you don't actually know which of the budget is currently being implemented or which one is currently being enforced. So I think there's a need to reinstate that clarity and reduce the rollover, so that when planning, when you talk about budgets, it plays a major role in planning, even for the private sector, for borrowings. So it has more far-reaching implications than just the numbers.
And, implementation of the budget, that's also another conversation. Even when we create the budget, whether we're rolling it over or not, what percentage of that budget actually gets implemented? The allocation of the budget of the money is right there. I mean, we've heard a lot of ministries talk about how they hardly get even up to half of what was budgeted for them.
Yes, definitely. That's budget actual also helps. Before, at least almost on a quarterly basis, we're able to see what the past budget actual spending has been. And even for government itself, it will also help in planning. If you know that you are falling short significantly on your revenue, you can look at some of the major cost items that you can bring down. So there's a need to also see that and provide that transparency for even for the populace or Nigerian policymakers across the world to also have an idea of what is really going on. Because when you analyze even the 2026 budget, estimated about 58 trillion is what was submitted, and Senate talking about 64 trillion. You look at the projected actual revenue of about 50% of that, and deficit very significant. So what will be in the mind of where will that gap also come from? So we hope that this 2% of GDP that IMF is pointing to is also not a way to manage around how these figures would balance up at the end of the day.
All right, Dr. Ayodijebo, we haven't gotten reaction from the government on this, or have you heard anything?
No, not yet, but I feel that this shouldn't be swept under the carpet. It would be very good to provide a very detailed response.
Yeah, because I mean, if we're talking about, as you calculated, between 8 and 9 trillion naira not captured in the budget, that's a lot of money. And as you said, the impact on inflation and all of that, we should not underestimate that. But thank you so much for your time on the program, Dr. Ayodijebo, Principal Consultant. Thank you and enjoy the rest of your day.
Always my pleasure. Thank you for having me.
Yes, sir. Let's take a break. When we come back, we'll go global. Please stay with us. All right, you're going global with me this morning. Let's start from what's going on in the U.S. markets. It's closed today, but first of all, our correspondent, Maria Bird, captured the close of trade on Thursday and shared it with us.
The U.S. stock market was mixed on Thursday as the Dow Jones was up at 1.1%, the heavy tech Nasdaq was down at 0.9%, and the S&P 500, which is slightly down at 0.1% down. As we saw some major blue chip sell-offs on the day on Thursday, but also investors were watching the U.S. jobs report, which came in lower than expected. As only time will tell how the U.S. market will respond to the stock market and respond to the jobs report, as there's much hope for the third quarter of 2026.
The markets are set to be closed today, Friday, in observance of the Independence Day holiday, but futures linked to main indices on Wall Street point higher, while South Korean equities rebound after a difficult week as bets on Federal Reserve interest rate hike later this month fade following a soft U.S. jobs report. We saw that yesterday, and other factors. From the U.S., let's head to Europe, and we see the Eurozone services industry contracted at a slower pace in June as cost pressures fell at the market, and it's at the sharpest rate on record outside of pandemic-era lockdown. That has helped to stabilize the broader economy after 2 months of decline. This is according to a survey. Oil prices dropped for a third consecutive day as concerns over supply disruptions eased after Qatar said that Iran and the U.S. had made progress in talks over the Strait of Hormuz. S&P Global's Eurozone Services PMI business activity jumped 49.4 in June from 47.7 in May. That's still in the contracting territory, though, while marking 3 months of contraction. It was above preliminary estimated for 48.9. Still around there, Germany's services sector contracted for a third straight month in June, and weaker demand dragged down by higher prices and lower market confidence continued to weigh on activity. And the final HCOB Germany Services Purchasing Managers Index compiled by S&P Global rose 48.6 in June from 48.1 in May. That's nearly 2 points higher than an initial reading of 46.8. Of course, the reading below 50 indicates contraction, and the further it falls below that number, the faster the rate of contraction. June's reading, which is the highest since the downturn began in April, and this indicates only a moderate rate of decline for Germany. Still in Europe, Italy's retail sales increased 0.2% in May compared to April. This is according to data released by Istat on Friday. The previous month showed no change. On an annual basis, retail sales climbed 2.2% in May compared to the same month last year. This marks an acceleration from April's revised 1.7% year-on-year increase. Food sales rose 0.2% more or more month-on-month in May, while the non-food sales also increased by 0.2% during the same period. The figures are expressed in value terms and do not account for consumer price changes. Italy's Euro Harmonized Consumer Price Index showed inflation of 3.2% in May, and that's compared to the previous year. Goldman Sachs has upgraded AP Moller Maersk to neutral from sell rating on Friday, raising its 12-month price target to 16,000 Danish crowns from 13,000 crowns. And they are citing shallower than expected deterioration in container shipping supply-demand conditions. And this is heading into 2027. Analysts say that the upgrade reflects lower forecast free cash flow burn over the coming years, which mechanically has lifted their dividend discount model-based targets. We're going to Asia now. Shares of Tesla's major Chinese supplier climbed after the electric vehicle maker reported stronger than expected second quarter deliveries, easing concerns over slowing demand. The upbeat sales figures boosted investor confidence, with analysts saying that the results reflect resilient global demand and could support production across Tesla's supply chain. India and Japan, they've signed more than 100 agreements spanning sectors from agriculture and technology to space exploration, marking a major step in deepening bilateral ties. The wide-ranging partnerships cover areas including mushroom cultivation, clean energy, digital innovation, and lunar exploration, underscoring both countries' commitment to expanding economic and strategic cooperation. Now, Japan's annual wage negotiations have concluded, with average pay increases exceeding about 5% for the third consecutive year, signaling continued momentum in workers' earnings. The outcome is expected to support consumer spending and strengthen the Bank of Japan's efforts to achieve sustainable inflation, driven by higher wages and domestic demands. And now to the markets before we leave, and it's a red market still, but it's not so much, 0.01%. Who knows? The trend hasn't changed, right? Let's tell ourselves the truth. The all-share is 224,307.59. Drivers of This Qtix is down 4.91%. ICO is down 1.50%. And we also have Geregu still down right there. NACO, Nestle, May and Baker all down. Eternal oil is actually green, 9.27%. Transnational, Transnationwide Express also green, 9.46. Airtel Africa seems to be getting some positive sentiment these days. FCMB and UBA, they're also green. But we'll see more of the markets or latest numbers at 1:30 when I'll be back for Business Incorporated. And do remember, I promised that we would see the market trend for the first half of the year. And let's see if we're still positive or not at the NGX as we begin this second half. I'm Ini John Mekwa. I'll see you at 1:30. God's grace.